welcome back to the Roundtable. This is Emilio DiSpirito with the DiSpirito Team, Prudential Gammons Realty, and Zachary Levesque with Maverick Funding. In this segment, Zach is going to talk about investment properties and how you can gain equity if you buy now, and how you can also make money monthly if you buy right.
Doesn't that sound nice?
And
making money off an investment property
always sounds nice.
Well, I think listeners have heard us for the last couple weeks, and if you go on financial websites, real estate websites, everybody's talking about how it's a great time to buy, refinance. There's so many factors that contribute to that fact. Mainly rates, real estate is low, and most sources indicate that real estate is going to appreciate over the next couple of years. We talked about it last show. 4, 5, 6% increases projected over the next 3 to 5 years. So you can build equity in something that you buy right today. Now, it's a great time to buy. It's a great time to buy a second home, a principal residence. But if listeners out there have had any interest in looking at potentially purchasing an investment property, now is definitely the right time. Now, investment properties have different characteristics to apply and to be able to be approved for the loan. One is, because it's an investment property, mainly the interest rates are a little higher because it's generally a higher risk for the lender. The client's not living in it. Not that it would be mishandled by the tenants, but there's less control from the homeowner. It's more risk because usually investment properties have a higher default rate than principal residence because somebody's always going to hold on to their house that they live in if they get into financial disarray. So interest rates are a little higher in investment properties, mainly usually around 0.5 point to 0.75 point in interest rate.
It's really not much.
It's not much, especially when you spread it out over 30 years. I looked at pricing today. If you have a 720 credit score and you're buying a 3-family property, you'd be in the high 4s, which is still a fantastic interest rate. Now, we talk a lot about property values increasing. So right now, there are so many properties on the market in Rhode Island, in the West Warwick, Cranston, Woonsocket area, they're not foreclosures, they're properties that are in good shape, that you can potentially buy these, really not do too much work to them and rent them out. Now, can you expect to buy a property in October and November 1st have all the floors rented out? Probably not. So you have to take a lot of things into consideration, but you should be able to get tenants in pretty quickly.
Yeah, within 30 days.
Within 30 days. So you close on something in October 25th. If you market it correctly, and whoever is the realtor that represents you for the purchase should be helping you rent it out as well, correct?
Yes, absolutely.
Right? So they can use you as a source to help rent it out. They should be able to get somebody in there December, because that's the key. If you're buying an investment property, you're not living in it, you're paying the mortgage, you have to have the rents to offset it, and that's the whole purpose of my segment now. So I took a specific property, which is one of your listings, to factor what the monthly payment on the mortgage would be, and this will include taxes and insurance. I estimated the homeowner's insurance. Usually homeowner's insurance on an investment property for a multifamily is about 30 to 40% higher than a principal residence property, just saw the risk characteristics. So I took a look at 1046 Cranston Street. That's one of your listings, right? You familiar with the property?
One of Prudential's listings.
Okay. Oh, one of Prudential's listings.
Yeah, same,
okay.
Same.
Got it. I believe it's a 3-unit. It's got a garage. It's a 3-level, correct? In a nice area in Cranston.
Yep.
It is in good shape,
yeah,
from what I understand.
Decent shape, yeah.
Decent shape. And it's listed at $189,900. Now, do you have any idea how long this property's been listed? Sorry to put you on the spot, but
no, that's okay.
I know it's not your listing, so it's tough for you to have that information.
No, I believe it's actually been on for a little while.
Okay.
And don't quote me on this, but it's been over 100 days.
Okay. And again, if any of these facts about this property interest you, call Emilio. He can set up a showing for you on this property, because this is the exact kind of property that if you're in the market for an investment property,
sure,
this might fit what you want.
Any property, but yeah.
Absolutely. So this is listed at $189,900. Let's just assume it goes under contract for that amount and you buy it for that amount. But you know, everything is up for negotiation, as we all know. So if you were to buy this at $189,900, most investment properties for mortgage application require 25% down. So that's the biggest thing. If you've had a desire to look at these properties, you have to make sure you have the down payment, because when you don't live in it, banks require more down just because they're a higher risk loan.
I've got a question for you.
Sure.
Can you take money out of your current home if you have equity in it to do
Happens
it?
all the time. Happens all the time.
I thought so.
Yeah, I mean, you can. Do we want to tell people to take money out of their 401k? Absolutely not. No. But we've done many investment purchase loans where sometimes people might have money in the bank, but it's in the stock market. If people have money in the stock market right now, they're making good money on it. You don't want to pull that out. We do many transactions where clients have equity in their principal residence home, and they take equity out to use as a down payment. And there's so many products out there. We did a loan last month. Somebody took equity out of their property. They were in a 30-year loan. They had 26 years left to pay. So they said, well, I need to take the equity out for the down payment, but I don't want to start over on my mortgage. As a direct lender, other lenders can do this as well if they're a direct lender like Maverick. We have the ability to write a loan from 10 to 30 years per year. So I could write a 26-year mortgage so they don't have to start over. And we probably can give you a better rate than what you have now since rates are back at historic lows. So they took the cash out of that house that they live in. There's a down payment, close a couple weeks later on the investment property.
Awesome. That house is going to appreciate anyway. So.
100%. And it's not like you're taking cash out of your primary residence at a higher interest rate. Rates are low. So you're probably either getting the same rate that you have or you're getting a better rate. So it's a win-win. Cheap money. Money is very cheap. So I base this mortgage payment on a 4.875 interest rate and a purchase price of $189.9 for 1046 Cranston Street. I estimated the taxes, well, excuse me, I used the taxes from the city assessor's website and also put in an estimate on the homeowner's insurance, which I estimated high so that I had a pretty accurate payment. This mortgage payment, including taxes and insurance, is $1,128 a month. Yeah, $1128. Now, if you buy it at $189.9, you have to put $47,475 down. That's 25% of the purchase price. So if you lower the purchase price, you lower the down payment comparatively. The market rent for this property in Cranston, if you add all the 3 units up, is over $1,900 a month. So if you have this property fully rented out, you can expect to make $770 per month by owning this property. In addition, you're retaining an asset that is expected to rise over the next 3 to 5 years, 4, 5, 6%. So if you buy it right now, a $190,000 house could be worth $220,000, $230,000 in 5 years.
You can also rent out those garages as well.
Yeah, I didn't include the garage. I wanted to be very, you know, I wanted to give as close to factual information as possible. But, you know, you also have to take into consideration there's other expenses that could come up with the house. You have to look at that, but
always,
you know, but
vacancy,
$770 a month vacancy factors. $770 a month is $9,000 a year in income, and that goes on your tax returns. You can write off the income based upon your expenses, so it can help out your bottom line for your tax returns as well.
Awesome.
Yeah. So I think that should open a lot of people's eyes to the fact that you can actually make money on your investment property and you're acquiring an asset. And let's not forget the fact that if you retain this property for a long time, eventually you're going to own it. So if you pay that off in 15, 18, 20 years, that's all cash that you're netting because all you're paying is taxes and insurance. You don't have a mortgage payment. And if you ever get in a tight squeeze for cash, you just sell the property. You
can always make those principal-only payments too to knock it down quick. So,
absolutely.
You know, if you'd like to reach out to Zach for more information, feel free to you can even text Zach over to 401-359-2.
Z-A-C-K, not Zach. Z-A-C-K.
Over to 401-359-2338. And you can also see his mugshot on www.theroundtableradio.com. Hey, we'll be right back with the lightning round. And it's Zach and I are going to battle. He's going to ask me mortgage questions. I'm going to ask him real estate related property questions.
This is going to be your demise. This is the last week, Emilio. Get ready.
Stay tuned.
Stay tuned.